Hello everyone, welcome to Forex Comrade Forex classes. Today we are going to explore one of the most fundamental concepts in Forex trading, support and resistance. Understanding these key levels is crucial for any trader looking to make informed decisions and maximize their profits. Whether you're a beginner or an experienced trader, this video will provide you with a comprehensive overview of support and resistance, how to identify them, and also how to use them to improve your trading strategy. So, support and resistance. What is support and resistance? Have you ever heard of support and resistance? If not, it's time to pay attention. This is arguably the most important tool of technical chart analysis. So let's dive right into it. So, support and resistance are price areas at which buying and selling pressures are strong enough to prevent the price from moving further. When there are many buyers at a certain price, it creates a support level that supports or stops the price from going lower. Similarly, high selling interest at a certain price forms a resistance level. So there are three types of support, but before we jump right into those, I'm going to explain to you what it means when we say we have a support and we have resistance. So let's say, for example, at this point the market is moving like this, and then we'll put another one like this, and then the market goes back up again, let's say for example at this point, and then it comes back again, let's say for example at this point. So, and then the market goes back up again like this, let's say for example it reaches this point. So as you can see, as illustrated by this diagram, we can see that the market is failing to break at this point. So this means that this area can be labeled support. So as you can see, let me change the color so that you can clearly see. So as you can see, we can mark this area as support. Let me mark it. Right. So this clearly indicates that the market is failing to break to the downside. So meaning that at this area, at this point, from this one, and this one, there is what we call the buying power or the bullish power. So it means that the bulls are actually strong at this point, whether it's psychological or it's horizontal. So let's dive right into the strategies. So for example, we have support. I'm going to identify it on this chart right at this point. As you can see, at this point the market failed to break at this point, and also at this point. So I'm going to put arrows. Let me put some arrows so that you can understand. So the market failed to break at this point. So this is what we call the horizontal. So this one is the first. I'm going to label it the first one. The first one is called the horizontal. So this one is known as the horizontal, whether it is at the top as the resistance or at the bottom as the support. So at this point, this one, we call it the horizontal support, meaning that the market is actually failing to break to that downside due to this buying power at the horizontal. So this one is more like it is symmetrical. And then I'm going to illustrate to you a horizontal resistance. So these notes are very important because they help you to understand. As you can see, the market failed to break to the upside quite a number of times. So this is very important because you have to know what the market is going to do next, the next time it reaches that point. So this is what we call the horizontal resistance. So I'm going to put support and resistance here. This one is the resistance, and this one is the support. Right. So as you can see, these areas are very important because this one is the support and then this one is the resistance. These areas help you identify the areas where the bulls are strong and the areas where the bears are strong. And then we move on to our second support or resistance type. We have this one that is known as the trend line. So the trend line is the support or the resistance that is trailing. So in other words, when we say trailing, it means the market is actually following up on the new higher highs that are being created. So at this point, let's say for example, I'm going to put shadow zones so that you can understand this one and then this one and then again. So as you can see, the market is constantly creating new higher highs and new higher lows. So these ones, if we connect them like this, they create what we call the support line. This one is a trend line. As you can see, it is diagonal. So a diagonal trend line is the one that is known as the support, the trend line support or resistance. So I'm going to label it again like this. The support. So this one, and then conversely, if we put the line at the top like this, that creates the high highs. It means that the market, this one is known as the resistance, the trend line resistance. So this is quite easy, guys. You just have to take note of all these things. Right. This is quite simple. As you can see, the illustration is very simple. You have to take note. These notes may seem very useless to you, but they are very important. This is arguably the most important trading tool in technical analysis. So moving on to the third and last type, we have the psychological. So this one, the psychological, is more like it can not be represented on this chart, but however, I'm going to explain to you. For example, let's say for example you are to choose trading with $100 or trading with $97.74. Obviously you're going to choose $100, not because it is more than $97, but actually it is a round figure. So in terms of trading, there is what we call psychological support and psychological resistance. So these areas are more like people are actually choosing to stay at round figures. So in other words, another example is investing $50 into a stock of $47.58, obviously your psychology is wired to pick the $50 option because it's actually easier to understand. Similarly, traders often set buy and sell orders at round figures such as $50, $100, $1,000, etc. Thus, these levels can represent important milestones that the price must overcome. This increased trader activity turns them into support and resistance levels where the price is likely to reverse. So basically, this is what I have on psychological support and resistance. So there are 3 steps to find the perfect support and resistance level. So the first one is find the area, not the line. So in other words, you just don't have to put a line where you think the line might fit. You have to find the area, like for example, at this point, this one is the area, not the line. And then the second one is significant levels are found on bigger time frames. So you have to make sure that you are at least using the 1 hour time frame, like for example here, or higher, like the 4 hour time frame, the daily time frame, or even the weekly time frame. So these are the time frames where you can have strong support and resistance levels. And then the third way is actually to look for a minimum of at least 3 reversals to confirm that level. So for example, at this one, the first reversal, the second, and then the third, which makes it actually a valid support level. In other words, you just don't have to see 2 lines failing to break to at a certain point, and then you just decide that the market has formed a support or a resistance level. Like for example, another example is this one. As you can see, this area 1, 2, and then 3, and then 4. So it means that this is actually a strong resistance area. As you can see, we can put a shadow zone because the market failed to break to the upside more than 3 times. This makes it a valid resistance area. But what if the level breaks? So I'm going to look for an area where the level broke to a certain side. So as you can see, for example, at this example that I've identified earlier, the market, when it reached this point, this time it didn't bounce back to the downside. However, it broke to the upside. I'm going to put an arrow. When it broke to the upside, it means that this area that was called the resistance area has to change now. It is now it has now become the support area. As you can see, once it is broken to the upside, it becomes the support area because this line was once a resistance, but once it is broken to the upside, it becomes a support area. Conversely, if a line was once a support line, and it is broken to the downside, it becomes a support line. Lastly, it's common that support and resistance levels can switch roles. In the example I've just explained earlier, the selling pressure was overcome by the buying pressure, as you can see, and then causing the levels to switch, or in other words, it flipped. Thus, the previous resistance level now becomes the support level. If it breaks out, if it breaks again, it becomes the resistance level in the future. So now I think you can head over to the chart and get good at trying to find tradable support and resistance level, and just go and try it out. So moving on with our resistance and support levels, another important thing you have to note is to identify support levels, like I've said earlier, and then after identifying these levels, you have to make sure you know how to trade using the support and resistance levels. So the three ways that you can use when trading with support and resistance levels is you have there are three strategies that you can use. I'm just going to list them. The first strategy that you can use is bouncing off support and resistance. So as you can see at this point, you can actually put your order here. You can actually put your order here because you actually know that the market is going to buy. Since this is a support line, it is never going to be broken to the downside. But however, you cannot use this information only. You have to use it in conjunction with other trading techniques that you have learned, and I'm going to do another video or other videos explaining other technical analysis strategies that you can combine with support and resistance strategy to form a very formidable trading strategy. So in other words, at these areas you can actually execute the market because you know that there are high pressures of support and resistance, which means they are going to be associated with selling pressure and buying pressure. So at these areas you'll be looking for buying opportunities. At the support line you're going to be looking for buying opportunities, and at the resistance line you're going to be looking for sell opportunities. And then other strategy that you can use is the breaking out strategy. As you can see, as the market was forming this resistance line that I've drawn earlier, when this market was broken to the upside, let me try to zoom it so that you can see it clearly. As you can see at this point, the market broke to the upside. Let me put a line. The market broke to the upside like this and then came back for a retest. So after it comes back for a retest at this point, you can actually decide to sell. Sorry, you can actually decide to buy, because you know that this area, once it is broken, it means that the market is going to buy for some time. So generally it means that you can use this as an opportunity to buy or sell once it is broken to either the upside or the downside. So this is how you can use support and resistance in your day-to-day trading. And then lastly, you can also use support and resistance level as targets. So if you don't know, let's say for example you have sold at this point. Let me put a line. Let's say for example you have sold at this point. What do you think is going to be your take profit? Obviously you're going to put the take profit at this point, because this is the support line. You know that the market is not going to pass through that line. This is why I always say in my videos, you have to put your take profit at the next area of confluence. This is what I mean. So in other words, you can use the support and resistance levels as your take profit or your targets, right? So this is what I had on the support and the resistance levels. This is very important. I know a lot of you are going to say these are not important, but if you master these skills, you can be able to make informed decisions in your day-to-day trading and be a profitable trader. So I'm going to do other videos explaining other technical analysis strategies that you can combine with the support and resistance level strategy, so that you can create a formidable strategy that you are going to use to be profitable. So let me know what you think in the comment section below. Please do not forget to subscribe hit the notification bell so you don't miss out when there's an important update. So see you in the next video.